Hello everyone. This is the pre-market report video for today, 18th September 2024 for the Indian stock market in terms of Nifty and Bank Nifty. Finally, the D-Day has come. Most probably near 99%, tonight Fed is going to perform their first interest rate cut, and the question is whether 25 basis point interest rate cut or 50 basis point interest rate cut. I mean, this rate cut increasing cycle started in February 2022 and peaked 5.5% in July 2023. From that July 2023 to till date, 14 months in a row, Fed kept their interest rate at paused, meaning for the 12 FOMC meeting, Fed they discussed and did nothing, kept the interest rate unchanged. Hence, today and tomorrow is completely uncharted territory, especially for most Indian retail traders, including myself. So whatever the market financial behavior, what we observed in the last 3 to 4 years is irrelevant. It's not the same. That doesn't mean we don't need to have expectation. Since we are traders and investors, we each one of us have our own expectation. Without that, no point to do trade or invest. I mean, we are entitled for that, and most probably what I expect, it always go against it, especially intraday. Anyway, this is what I expect. I don't think market will consolidate today, rather expect it to move violently, at least in the second half, like how it behaved on last Thursday Nifty expiry. The logic behind that is very simple. Most people don't carry forward the position tonight, especially option sellers. I mean, here option buyers, most of them don't care. Maybe those who are sitting with profit might close the position. Other than that, I don't think option buyers will care to close. On the other hand, option sellers, most people will try to close their position, and as a consequence, based upon the direction, either call option premium or put option premium will increase, which in turn will increase the VIX. I mean, if required, please pause and have a look. This is the FII's yesterday trading activity. On the cash market, the net bought for around 500 crore rupees, and also similarly on the index future market also, the net bought around 425 crore rupees, which is okay. But the issue is index option market. I mean, the net sold for 35,800 crore rupees, and similarly yesterday also the net sold for over 30,000 crore rupees. As we discussed in detail in the last pre-market video, this is like exactly the same thing happened last week in the Nifty index. Tuesday and Wednesday together, they sold like 80,000 crore rupees worth of index option, and on the expiry day, the net bought for 50,000 crore rupees. Hence, for me, it looks like the repeat of last week Nifty. Just a disclaimer, it's just my opinion. I have zero trade position open at present. Don't make investment decision based upon this. Anyway, in the last video, we discussed on Monday, they sold more call options. In direct contrast to that, yesterday they sold more put options. I mean, added 3.6% more put option, and in addition sold 7% more. Hence, if required, please pause and have a look. This table is very important. In both long as well as on the short side, FII's put call ratio is around 1.4, which is crazy high. Same, proprietary traders also got higher sold put call ratio than the bought put call ratio. In an ideal world, all these considered as hedge, but here we cannot consider that. Since if some of those put option positions squared off today means market could rebound, but as I said multiple times, I could be wrong. Just for info, in the index future market, FII is holding near 68% long. Moving to US market, before their market opening, US government released retail sales data for the August month. On the monthly basis, core retail sales data without food and fuel increased only by 0.1% against the expectation of 0.2%, and also way below compared to July month data. So core inflation not good. However, with fuel and food, it increased by 0.1% against expectation of decrease 0.2%. So the macro data is weaker, hence it favors higher interest rate cut. In line with that, at present, CME Fed Watch tool indicating 63% chance for the 50 basis point interest rate cut. However, despite that, understandably, US market was nervous. Hence, it closed flat to positive. Dow Jones down very marginal 0.04%, S&P 500 increased very marginal 0.03%, and Nasdaq increased slightly 0.2%. Despite the flat trading day, VIX increased around 3% and moved near 17.5. Here, though US market was okay and flat, last night IT service stocks didn't perform well. Accenture stock fell by near 5% because as per Bloomberg, their staff received the email that they're delaying the staff promotion to next June, which is supposed to happen this coming December. This didn't go well with the investors since they think Accenture is postponing due to the demand concern kind of. Anyway, as we know, Accenture is the industry leader, so all the stocks in those sector got affected yesterday, including the two Indian ADRs, Infosys and Wipro, both of them down around 1%. However, banking ADR stocks in line with the US market closed flat. Hence, the takeaway from ADR is, for now, IT stocks clear negative, banking stocks flat opening indication. Then about GIFT Nifty, early morning today, it closed at 25,422. Equating it with spot market, it's indicating 20 to 50 points gap down opening. Then regarding oil, because of retail sales data surprise increase without the increase of core retail sales data, which in turn increased the oil price by 1%. At the time of this video, WTI crude trading around $70 per barrel and Brent crude closed near $74 per barrel. So those were the things happened yesterday in the global market. Now let's discuss the Indian stock related news. First of all, finally after July 2022, last night Indian government mentioned on their Gazette notification that effective from today, the windfall tax on oil and oil related product will be zero. No more windfall tax. So today we can expect the market to react for it. I guess it's positive for Reliance and all oil production company. Let's see. Second, in the ADR market, we discussed about the negativity around IT stocks, but as I said, it was plainly due to Accenture. Despite that, Infosys got the positive news. They signed an agreement with Metro Bank for their digital transformation. So possibly this might support the market today. Third, in the aftermarket hours, REC, Rural Electrification Corporation, issued the statement that they signed a pact that they are going to lend and fund around 1.1 lakh crore rupees with the renewable energy developers. Hence, REC and some major renewable energy developer stocks will be on focus today. So as a summary, US market closed flat. Still, GIFT Nifty indicating a gap down of 50 points and the weakness in IT stocks is not good. Thus, for the moment, it's indicating a negative trade. Let's see. However, no windfall tax is positive and this crazy FII high PCR ratio might create some profit booking. So possibly Bank Nifty might outperform Nifty. Anyway, as per stock open interest, JK Cement, Biocon, Apollo Tyres, HAL and Ashok Leyland got the short built up. On the other hand, Hero MotoCorp, Bajaj Auto, Bosch Limited, Mother Sons and Persistent got an increase in open interest with a positive price close indicating the long build up. Then about the things to look out, after 2 days of holiday, Chinese market will be open today. Then during our market hours, first at 11:30, UK's consumer inflation data is due and at 2:30 p.m. Europe's consumer inflation data is scheduled to release. And finally in the night, very important, US Fed interest rate decision and Fed FOMC press conference are the some of the important items we need to keep an eye out today. Here the wider market expectation is to cut 50 basis point interest rate cut. If not, it will be disastrous. Then regarding technical, I think it's irrelevant today. So that's all in this video. Hope you all got some information. Please consider subscribing to the channel and liking the video so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment based on this as not a SEBI registered advisor. I am doing this for me and viewers educational purpose only. Thanks for watching.